Cool. So I think where we left off was that that's running. Let me enter a buy. Let me click manage, get these targets in that manage. Let me manage this one also. I want targets on both. Cool. So now, let me move this. So the question was, hey, you know, the price was moving up. Could you take partials by clicking these buttons and then keep these targets intact? The answer is yes, absolutely. Just click your take partial. It'll take the partials while these targets will remain. And you could always double click and delete targets as you need. And I'll show you some shortcuts as well. So if you wanted to delete targets here, you can press Control B. This is just a MetaTrader 4 thing. And the MetaTrader 4 thing, once you click on Control B, or you can right click your chart and click, is there objects? Object list, Control B, right? You can scroll all the way down to find the TPs. So here are the TP lines, right? So I can just click this and say delete, boom. And if it's not listed, just click list all because it lists a certain amount at a time. And then you can start to delete your lines automatically here. Here are my more targets. I can click delete, delete, boom. And it's redrawing it because I have managed trades on. So if I went to Control B, I turned it off, Control B in this chart, and I say, hey, let me delete these, right? It doesn't redraw them, right? Because it's not managing anything. Yep, so we're good. It's not managing anything. But the minute I click on Manage Manual, if I say, hey, you know what? I went into on the 5 minute on the left, everything is working well, but now I really I don't want to have these targets. I want to now, convert this or move this over to a longer trade to a 15, well, then delete your targets here that are on the 5 and then just click Manage Manual on the 15 and then you'll get your targets and you can let it run. Simple as that. So now let's talk about fib targets, right? So fib targets, let me close this trade. Actually, I'll keep it open. Fib targets is a little different, right? I'll delete this. What you could do with your fib targets is you can run fib targets manually, right? So, I mean, this is a major swing high, swing low, but say we were, and this is a buy, say we were in a buy, this is a buy, and we wanted to create fib targets. What you could do is you could pull out your fib tool, just click your fib tool up top, draw your swing high to swing low, right? Because we're in a buy. So we want targets to be, you could actually go the other way, but we want our targets to be auto painted using our tool. Let me zoom out. Let me see what's going on here. Yeah, let's try it this way. This is a little different than the way I used it in the past. You can draw this out. And if the minute you draw this out, you'll notice if I'm in edit mode, take a look at these buttons here. It says protect, take partial, manage. The minute I double click this and get into edit mode on this fib, you'll see those buttons changed, and those buttons changed to add fib TPs. And all you need to do is just click add TPs and it'll auto draw the TPs out based on the lines that are in your fib control, your fib indicator, your fib tool. So then what I could do is, now that I click that, I can double click it, I can delete this object, and now I'm running targets automatically. So you could just draw out the fibs that you want from your swing lows to swing highs, and it'll automatically create those fib targets for you. If you can see, it says here, you probably can't, but I'll read it to you. Fib 236, fib 382, fib 0.5, 618, and so forth. So you can, whatever settings you have in your tool, in your fib tool here, it will draw the targets. Right, so if I Control B, I'm going to remove these really quick and do that over. These are the fib targets. I'm going to delete these, right? And these buttons here, once again, are manageable also. So you can go into Shift U. You can move your fib buttons the way you want, Shift U, and then that's universal. All the other charts will have this setting as well. This is going to update in a second. Shift U. Let's do this. I don't know. Shift U. You're not seeing it update here because we're not running fib. We're not in the fib menu on this page. But if I were to load it, you will see. Yeah, let's see if I can load it. let's see here. If I were to draw this like this, go into edit mode, you see it actually put the buttons, it loaded the buttons using the global settings. I'll delete this here. So, and quick and easy way for you to, just move this here, like my fibs like this, boom, shift U. All right, I'm going to delete that fib. I'm going to delete this fib, and then I'm going to draw out my fib, right? Boom, from swing high to swing low. And what will happen is, if you want to, you need to go in and change your fib settings. If your fibs don't look the way you like it, you're gonna have to change your fib control properties. And then you're gonna go and enter your fib levels here. And anything that's entered here, it will draw targets out as long as it's in front of price, right? So I can click add fib TP, boom, and it'll automatically add it. I can right click the fib and delete the fib. And now I'm just running with these targets all automatically. Simple and easy. Fib stop loss is not running yet. I just did the TPs. The SLs will be enabled, you know, in a few days or so. I want to get some of my trading time in. I want you guys to debug it, but I wanted to test this concept where you can draw your own fibs. And the reason why this is valuable is because Rosalind and a few others in the group, they realized that when you enable fibs in the EA, and you enable fib targets, right? And you define your fib targets, what it's going to do is it's going to auto draw targets based on the nearest swing high to swing low. So it may not take a full move. It may not account for a full move, or you may have targets that are too close, crunched up, or too far. So this allows you to like really, really customize your fib targets. And that's it. That's the new functionality. If you guys are experiencing anything weird, strange, obviously just report it so that we can, you know, I can then release this. This version is going to expire within a few days. So we should get all of our testing done, get our, you know, our bugs reported. And then once we know that that's working, I can release the full version. And speaking of which, I'll be doing that for the trend line. So I think many of you all are running like the beta version of the trend lines. I'm going to drop out in a few minutes after this call. I'll drop out the final version of the trend lines, and you'll have that as well in your arsenal to use those trend lines. Use those trend lines. I mean, they're super important. And what's going to happen is the way the logic is going to work was once you have these trend lines in, say I dropped the trend lines. I did some of this coding already, but say you have trend lines here. I don't know. Say it's like this, right? Say this is your trend line, right? What you're going to do is the similar to when you double click your moving average and get a menu, you're going to be able to double click your trend line. It's going to give you buttons, and you're going to say, click on auto trade it. Because when you draw out your trend lines, you can draw out a few, you want to remove some and so forth, but you're going to be able to double click this. You're going to get a menu that says auto trade trend line break or auto trade trend line rejection. And you're attaching that rule to this trend line. And then when price comes up and breaks it, it will trade it. If it rejected it, if you assigned it that way, it will then trade the rejection as well. So that's coming up with the auto entries. Cool. How are we doing? Everybody good? Everyone still here with me or what?
Hey, Squawk, what's going on, bro?
What's going on, Brian? How are you?
Pretty good.
Excellent. Excellent, excellent. So yeah, we're just going over this. I'm not sure if you were in the first session before my computer crashed due to low resources, but I will be dropping both videos for all of us to use. So another thing that we should do is, you know, keep in mind, you should always trade with your stop losses. Always trade with your stop losses. So you should put your stop losses in regardless. But there is another setting here, right? If I go to F7, there is another setting right here called, where is it? So we talked about the entries, right? Or the manage the manual entry. We talked about that. You could set it here, or you could just click the manage manual, or you can click on, or you can enable it here. Either way, we talked about the exits and how you can set up your SMA targets or your EMA targets, depending on what you want to trade. as targets. We talked about the minimum targets in pips, and that is the minimum value or the minimum distance between your open price or current price and the nearest target, right? Because sometimes you can get into a trade and be hugging right on a simple moving average, and it'll take a partial immediately. So you may want to say, hey, you know what? I don't need it. I don't want it to be so close to me. Let's push it out. What you need to do, key point, is understand what points and pips are in your system, because this is pips that we're calculating. But keep in mind, a pip in US 30 using FTMO is 0.01. That's a point, 0.01. There are 10 pips to a point. There are 10 points to a pip. So a pip would be 0.10, right? So that's just saying, hey, from 33,000.00 to 33,000.10 is 1 pip. Well, that's not going to do us anything. If we did 10 pips, that would be 33,000 to 33,001, right? So that's not a lot of movement. So you just need to understand what pips truly are. We use it loosely, and everyone uses it used loosely in the industry, pips, and this is what it is. But chances are it's inaccurate, and it changes based on your broker and how your broker calculates points and pips or points. So for me, if I wanted 8 pips, it's really not 8. I may have to change this to 80, right? Because I need 80 pips if I wanted to have a price range of 33,000 to 33,008, or if I wanted to expand it even more, I may have to change it to 100 or 200 points or pips, if you will. So I'm basically taking whatever your points value is, I'm timesing it by 10, and then I'm timing it by the value you entered here, and that's going to be your distance. So we talked about that there. We talked about enabling your fib targets also, and also managing it manually, where you could just draw your fib target out. That's how these were drawn out. You just drop your fib target on the chart, and it will automatically, if you double click it, this menu will change, giving you the option to add the targets manually. I'll do it here on this chart quickly. All right, so here I can say, I can say swing high. Just we'll go through this again. To swing low, say these are the targets that I want, and I can just now, do I have the EA loaded on this? Let's go. Okay, what happened there? Okay, I found it didn't add the button properly, but I'm going to do this again. I'm going to add this. Right. So if I wanted to create targets automatically using my custom fibs, I would grab my fib tool, I drag it on the chart. You see these buttons, they say protect, take partial, and manage manual. If I were to double click this, it changes the buttons to add a fib TP. And what it'll do is once I click this, it'll automatically add those targets based on the fib you drew out on your chart. So if you want to, you just have to configure this with using fib properties. You have to configure your fib tool here and add the fib levels and this particular section of the fib control, and anything that's here will be drawn out as targets. And then you can just, of course, double click. You can remove what you want. You can remove targets that are close. You can remove that fib that you used as a template to draw out your targets, and so forth. We talked about that. Let's see here. Let's go down. We talked about enabling band targets, right? Because you can have 3 different types of targets right now. You can have simple moving average targets, you can have fib targets, and you can have bands targets. So if you're in a buy, your band's target would be the band of the upper band. If you're in a sell, your target would be created for the lower band. Some people, they like to play the band. So just keep that in mind. I won't talk about this just yet because I do want to test some things, but basically, I won't go into it in detail, but these are actions that you could define for opposite LBs, right? So say we were in a sell way up here, right? Way up top, we were in a sell. And all of a sudden we get a buy, a lightning bolt that's opposite of our position, right? You can define what action you want to apply to your open trade. You can say, I want to close all immediately. That's how my auto trader trades. It closes automatically. All positions, the minute I get into a lightning bolt buy, the minute I get an opposite lightning bolt, it'll close my positions, and then it looks for conditions to get into that buy entry, and it just, ping pongs it, all day. You can define it to either take partials or take partial and protect, or just protect. I'm going to do some more testing there. This was quick, so you guys can probably test as well, but I'm going to do some heavy testing on my own time. I don't want to bombard you with that just yet, but these are other ways for you to exit or take partials for your positions, right? Then you have stop loss protection, right? So here you can enable stop losses to auto stop loss to break even. You can set that to true. So the minute it takes your partial, it's going to automatically move your stop to break even automatically. I think Aaron or somebody in the group had mentioned, hey, you know what? They just entered a trade and they made this profit and it auto moved the stops to break even. That's because this setting is set to true. You could turn that off if you don't want to have it auto move to auto protect. You can turn that feature off. What we have here also, this, once again, I'm going to be this, not once again, but I will share with you. This is something that I want to test. I didn't test it. So this will allow us to define how many partials we need to take before we move stops to break even. So sometimes on that first partial, you may not want to take or you may not want to protect at that point. You may want to take that partial and not protect yet because you're expecting some fluctuation. And then when it gets to your second partial, as it's defined, is then when it will protect. But I want to test that also. So these are two settings here that I want to test on my own. For me, I always just protect immediately, so I never really went deep on the functionality there, but I will test it and then we'll make sure that that works properly. There's another feature called enable loss reduction. If you set this to true, what's going to happen is if you were getting into an entry, say you were getting into an entry way up here, your stop loss should be below the swing low in this example, right? It should be below that swing low. Right, it should be below that swing low here, right? It should be somewhere down here, just a few pips below that swing low. But say you got in at this point with auto enable, what is it called? Stop loss prevention or loss prevention. Yeah, enable loss reduction. What will happen is it's going to auto draw out stop loss reduction target lines midway between your entry and your swing low. So if it moves 50% towards your target, it's going to take 50% of the risk off of the table so that you're not having to assume, 100% of risk if the trade went against you. And of course, you could always buy back in if price decides to move back up. That's the way I normally trade. I normally take my partials, or I'll take risk off the table. So if I'm in the one lot and price is starting to move towards my target, I'm never assuming a full loss. I'm always taking half of the position off the table, 50% of the way to my stop loss. And that will do that as well. And we can, we'll go in heavy on that. That's a little bit more of a complex concept, but if you all enable it, you'll see exactly what it's going to do. It's going to create these take partial lines for loss reduction. It'll be labeled loss reduction TPs. All right, and let's see here. I think that's really all we need to go over at this point in the game. We'll get into more complex concepts soon, which is going to be called the linked chart periods. I didn't really want to go over yet, but we'll talk about that, and that will allow you to link multiple charts to behave the same way as one and take partials and such. So that when you take a partial, you can say this was set to, we'll say we're on the 5 and I set this to the 15 and the 4 hour, right? Or 1 hour, right? You can link your charts to the 5. So if the 5 were to take a partial, it's going to look at all of the positions that the 15 and the 1 hour are managing, and it's going to take partials on those automatically as well. So you can get really creative there, but right now keep it empty because I want you guys to get a feel for how it behaves as is, and then we can talk about more complex concepts if they come up. If you guys say, I need a condition that, does this, or I had a trade on my 15 that was managing, and I had one on my 5. It took a partial, but it didn't take a partial on my 15. Why? Well, you can link your charts and such. We'll talk about that in the very near future. So that's it for those settings. For all those that are testing it, please provide all the feedback. I think that it's working pretty well based on the environment setups that I was able to recreate. But you guys are in your own setups and your own environments, and you guys are doing trades a little bit differently, perhaps. So you may have come across some conditions that I couldn't recreate in the lab. So you may find some conditions. If you do, please just let me know, and we will put it on the list, and we will address those. And I'll prioritize those as, are they high priority or low priority, and then I'll get to them in time, because there's a lot of things that we're doing, and we do want to get on these Zooms again. So it's super important. So that's it for the LB. And then what we could talk about for everyone that's new, let's talk about, and for just everyone in general, let's just talk about the concept of the lightning bolt strategy and how we trade it. So
I did have a question too. So
Sure.
when I was trying to take partials, mine won't actually take partials. Like even if the yellow take partial line is there and everything, is there something wrong?
What here's some settings you can review. You can always look in the upper right-hand corner and see if you have a smiley face.
Right, and
Right?
I do.
Okay, so you can see if you have a smiley face. What will also happen is you should be able to go to your expert advisors and go to your common tab.
Okay.
And you want to make sure that your allow live trading is clicked also.
I think that's where the mistake has happened.
Yeah. So that's got to be checked, and the auto trading button up top in your toolbar has got to be depressed. It's got to be pressed, and once it's pressed is when it's pressed is when it will auto trade. It will auto trade that button there.
Sounds good. Thanks for that. That's so stupid.
No. Yeah, let's try that. And then what I'm going to try is I'm going to do some things here also. I'm going to remove these. So I've got some testing here to do.
Well, I got a question real quick.
Sure.
I see the smiley face on the right hand side on the 15-minute chart is in green. And the other chart is in white. Is the 15-minute running the trades, or what is this? The green?
Yeah. So green, and that was a part of the earlier conversation. If you click on manage manual trades, you'll see it toggles the color there.
Okay.
Yeah. Right. So if I were to, let me just control B all and delete all objects, right? If we're in this trade, if I click on manage manual because I'm going to trade, it's going to automatically create targets for the chart that's being managed.
Okay, I see.
Yeah. So that's the difference here. So if you notice here, it's not creating any targets. It's simply because we're not allowing this chart to manage our manual entry. So the trade that I'm in right now was a manual entry. So I can click on manual, manage manual now, and then it creates those targets for me. Okay,
got it. Is this being recorded?
Yes.
Okay. Yeah. I can go back and just review them.
Exactly. So there you have it. A few things that I see in how it's doing things that I want to just verify. But okay, yeah, a few things. Okay, cool. So there's some things that I'll just review later on. You guys may not even catch them yet, depending on your usage, but there's some things that I see that I want to just know it's going to be on my list to clean up. And that's it. But let's talk about the concept of trading lightning bolt indicator, right? So basically, for those that are beginning, usually you start out with your support and resistance and how you draw support and resistance and so forth. And the reason why you draw those zones, it's important to know, is it allows you to identify where there's consolidation and also where you would expect a reaction in price where it could either pull back a bit, continue, break through, and so forth. But there's going to be a lot of activity there. And those are the areas where you want to identify opportunities, right? So you want to have zones on your chart. You definitely want to have zones on, let me disable this, let me close my positions. You want to have zones on your chart when making your decisions, right? You need to have confluence. So one of the confluences would be, hey, is it rejecting a zone, or did it break through a zone? Did it break through a zone and then retest that zone and continue? These are the questions that you need to have answered. But one of the big plays when you're talking about price action is you need to be able to see your zones on the chart. So if you're trading something like what looks like here on the right, you know, that is not good enough, right? You need to make sure you have your zones enabled, right? So for me, what I will do is, this one is what, a 30-minute zone. I'll say, let's say 800 bars. So if you were performing top-down analysis manually, you would start at, say, your hour 4, and you would go back a certain amount of bars, right? Some people decide to go back just a few bars because they see a swing high and they just want to draw a zone from that swing high, or a swing low and they want to draw a zone from that swing low. But everybody's zones may be different. We should have some that are uncommon because that swing high, if it's just a few bars back, should be accounted for. But some individuals will go back a little bit further to identify zones that are, you know, very relevant because they've been touched numerous times. So this value here will determine how many zones, how many bars back do you want to start calculating your zones. So I'm saying here, I want to go back 800 bars and start drawing zones from swing highs and swing lows, 800 bars back to the current price bar. So that will allow you to sometimes you can get, you know, a lot of zones. Sometimes you may not get enough zones depending on how price reacts. If price just breaks away and we've got all-time highs, well, it's going to be hard for you to find those zones, right? You have to go, if you were doing this manually, you'd have to zoom out on your chart, go to a high time frame, and see if you have some background noise, just mute yourselves. Right, so basically you would have to zoom out and go to a point in time in history and find, well, where did price ever react at this, or where in the past did price reach this level, and then you draw zones from that far out. So this controls that. The way I like to draw zones is I like to have higher time frame zones on my chart, right? So if I'm running a 1 minute, I want to have 5-minute zones, right? If I'm running a 5-minute, I want to see 15-minute zones. If I have a 15-minute chart, I want to run 30-minute zones. 30-minute chart, I want to run 1-hour zones, because I just want higher time frame zones because they are to be more significant, right? If I'm running a 1-minute chart with 1-minute zones, your whole screen is going to be blue, right? So you want to be able to have just zones that are going to be higher in its probability for a reaction. And then we can count on those zones for confluence. So say I was running a 5-minute chart, say this is a 15-minute chart, I'm going to then set it to 30-minute zones, and I'll go back 800 bars, right? So if I click this, click OK, because I'm on the 15-minute chart, it did not draw those 30-minute zones out yet. I need to click on my 30-minute chart. And once I click on my 30-minute chart, it's going to draw out my 30-minute zones. And then I could bounce back to my 15-minute time frame. And now I'm looking at a 15-minute chart with 30-minute zones. Okay, so, and if you wanted to remove a zone, you can just double click the zone and delete it. Boom. Okay, that's how you need to manage your zones when trading the lightning bolt, because we want to look for things like a zone rejection with a lightning bolt. If you just get a lightning bolt and it's right here in the middle of no man's land, then you don't want to take that trade, because what's your confluence? You only have a lightning bolt. You don't have anything else, right? If we were to look at these trades, let me just zoom out. Let me go down to the 5-minute. Right, so if we went here, you would see, if I could stop the scrolling. Why is it doing that? There we go. Okay, cool. So if we were to look at some of the reactions here, let's take a look at this one. So flat, there we go, boom. So here we have a lightning bolt, right? We have a lightning bolt because it was a swing high, a swing low. Price penetrated through this zone that we have here, swing low, and then it rejected that zone and closed above. At this point is when we got the lightning bolts, and here's where we can say, hey, you know what, do we want to make entry? on this trade? Well, what are our confluences? Right now we have a confluence is a lightning bolt, which is a high probability reversal. Doesn't necessarily mean complete reversal, because if you're trading in the trend, I'm afraid to put on my annotation tools, but if you were trading, let's try it again. If price were going down, shot up, went down, shot up, and you get an LB right here, say this is the LB here, doesn't mean it's a reversal of the overall trend. It's because in this example, we're trading with the trend, right? But it's just showing a reversal in price action or most recent price action, right? So it may not be the overall trend, but it's just showing a reversal in the previous swing high and swing lows. So we're seeing this entry here, or we're seeing a lightning bolt, and we're seeing a zone rejection. And now we can say, well, where do we want to make entry? Where do we want to make entry? You can decide to make entry as it's pushing through these simple moving averages, right? So a good entry point could be right here, right at this point here, as it's breaking through one of the higher simple moving averages. We got the 20, we got the 50, the 100. So as it's breaking this 50, this may be a good entry point here to enter this trade. And the reason why I wouldn't necessarily enter right at this point is because I've got all of my simple moving averages ahead of me. And for all those that know, the way I trade is I'm looking at these simple moving averages, the 20, 50, 100, 200, and 800. Thanks, Fred, that 800. Those are reactive levels. Those are levels where we should expect price to react. It's not a magic trick or anything. It's just that the world of retail traders, they're looking at those levels, and that's where they're making orders. That's where orders are sitting. They're sitting at these levels. So because we know this, and it's not like we need to know this by speaking to other retail traders, we can see it with price action. We can see how price constantly rejects those levels or reacts to those levels, and then breaks through and then comes back to those levels and pushes, and continues. So we know that those simple moving averages are going to be where price could react on us. So for me, I wouldn't get in just yet, because price could react and then put me in the negative. It could put me in drawdown immediately. I want to at least have some simple moving averages. I want to see a rejection or a break of, one of my major simple moving averages. So for me, lightning bolts, zone, simple moving average. You can use those in any combination, but definitely it's very powerful when you have those zones in place. So you can have a zone and a simple moving average, or lightning bolts and a simple moving average, but simple moving average. But I like to definitely include the zone rejection as well. So you need to make sure that that is set up properly for you. Let me go here, and I'm going to set this to 5-minute zones just to see how it looks on the 5-minute chart. I'm going to clear this out. Clear all. So if you don't have enough zones, then this is where you need to live in those settings, right? So we have a lot of zones up top here, but we don't have a lot of zones down here. But this looks clean to me. This one up here doesn't look clean to me. This is too, everywhere is a zone, right? So here's where you need to go into your settings and start to configure your zone settings if price were in this range. Right now, because we're down here, this looks clean. This is a nice clean, you can see it. It was a break. It was a break of a zone. It rejected the zone. It then continued to break through that zone. And then now we're seeing a reaction at the next zone. So this is a good set of zones for me to play at this price point. So here, if I'm seeing this lightning bolt buy with a zone rejection, chances are I'd probably get into this trade simply because the simple moving averages are far enough. And we know that these moving averages are going to be where price would have a reaction. So if I were to get in at this bar, I'm at least going to ride it up to this simple moving average and take a partial. But if the simple moving averages are right, in the example that I showed you, where it's like touching the bar that I'm entering, I need to see price get through that simple moving average. It's about being patient and waiting for that bar to, wait for price to penetrate those simple moving averages before you enter. So it's super important that you have that set up properly. The way I normally have it is I have 4 charts. I have the 1 minute, the 5 minute, the 15, and the 30. My 1 minute is running 5-minute zones. My 5 is running 15. My 15 is running 30-minute zones. My 30 is running 1 hour. and then I'll have another floater zone that doesn't have the indicator, but I'll run like, you know, anything I want to throw on the chart. So I'll usually keep that as 4 hour, and I'll run, you know, maybe, you know, my simple moving averages. And it's just something that I want to reference quite quickly looking at the 4 hour, but I don't need to have a 4 hour running my lightning bolts indicator. Right. So you need to just make sure that you have your zone so that you can build the case for why you're getting in the trade. If you're just trading off the LB, it's not enough. So you still need to understand price structure. You still need to understand support and resistance. You still need to understand consolidation. You still need to understand, you know, how to determine, you know, higher highs, lower lows. Are we in a trend? What is the overall trend? How do you do that? You need to, you know, you can look at higher time frames. Sometimes for me, just looking at the hour 4 is the H4 is good enough to see, hey, it's a bullish bar right now for me. So then I may trade with that hour 4 chart. With that trend that is the, you know, that the current H4 candlestick is printing. Right. Or you have to zoom out, you're gonna have to go in, you're gonna have to go out and look at your H1s or your hourly, your H1s or your 30 minutes and see, well, are we making higher highs? Are we making lower lows? What's the overall trend? You need to make those decisions and understand where you're at in the market. Right. So although we were making lower lows, you know, overall we're going downward. Now prices at a level where we should expect reaction. Right. So everything for me, we're talking entries right now. Right. So we know that price should expect a reaction. Here is where it broke through the zone, it retraced the zone and continued up. We're now at this level. Is price going to just straight break through this, or is it going to reject? Well, you know what? I would bet that it's probably going to reject it a bit. And for me, I'm getting in this LB as an entry for just a few pips. Let's talk about exits. Exits, for me, everything on the chart has meaning, right? If it's everything on the chart, unless it's this like this fib here, but everything on the chart from my simple moving averages to my zones, those are all areas where price would react. So you want to keep your charts clean, and just have, if you can, just things that are on your chart where you expect price to react. For me, the way I trade, the way we're trading is we know that my simple moving averages, that's going to be a point where price reacts. And also zones are going to be a place where price reacts. So for me, when I'm going into a trade, as price is approaching those zones or those simple moving averages, I'm taking a partial and I'm protecting immediately. That's the way I trade. You know, some are okay with that drawdown, where it could touch that simple moving average, reject, and you're in an overall drawdown for quite some time. And then, you know, you have to play that out. I don't like drawdown. So for me, as prices are approaching areas where I expect price to react, I'm taking a partial and I'm protecting immediately. That's the way I trade. Everything, every result that you've seen of mine is based on that strategy alone. Just partial and protect as it's touching or approaching areas where we should expect a reaction. You could enter once it, you know, if price came to this point and you took a partial and it came down and didn't knock you out and then it broke, well, you have another opportunity to enter. Look for those other opportunities to enter. You can always re-enter your trade and then just keep your stop loss on the opposite side of the simple moving average zone. You want to tuck those stop losses away. You know, you kind of want to hide them, if you will, behind where price would react. You wouldn't have just your, say we want to sell, say you sold here, you wouldn't just have your stop loss in the middle of nowhere, but you would expect prices going to go from this zone to that zone rather easily. And your stop loss here, you're going to get knocked out. If you had your stop loss on a sell position behind that zone, then that would give you a better opportunity for you to maintain or remain in that trade. And the reason why I take these partials often is because I don't trade with the idea of, hey, I got to have, you know, 10 pips. I got to hit my TP1. Because for me, the market is very fluid. We can't control the market. The market's going to do what it wants to do. We have no control over it. So how are we going to go into a fluid market with static values on what we expect to get and earn? No, I just take what the market's giving me at that moment and I'm good with it. And then you'll see my partials will be, you know, $100, $200, $300. $1,500 sometimes. And at the end of the day, I'm at 5 grand. So you want to, that's the way I trade. I'm not wanting to risk trying to guess, is it going to break through the simple moving average? And is it going to react? But is this reaction going to be just temporarily? And then is it going to continue up? Is there going to be volume that's going to push it up? No, I'm looking at it like, shit, this thing can change on me simple in a heartbeat. So I'm going to reward myself for getting at least here. And that's basically the strategy that we use. So we stack our confluences up for entries, and then we take our partials as we're touching our areas where we expect price to react. And that's going to be your simple moving averages, the 20, 50, 100, 200, 800, and zones, the zones that you have on your chart. So with the auto trader, I coded it the same way I trade. My auto trader looks for a rejection of a zone. It looks for LB first, and then it says, well, if did this LB reject the zone? And if it rejected a zone, okay, where am I in my fib levels? Like, I don't want to get into an entry above my 50. So many of you guys are going to experience this, where you can have a short swing high to swing low, and all of a sudden you're trying to enter, and you're entering not within the 23.6% retracement, but you're all the way up in the 50. Well, why would you enter here? Your stop loss has to be below the swing low at this point. So why would you enter at this point? It's just too far away. So for me, my guidelines are, I will enter all the way up to the 382 of retracement. And then if it breaks that, I'm waiting for price to pull back down into that zone, and I'll look for entry. I'm not greedy. I'm not in a rush to enter a trade. I've got to get my setup. So I've got to find my setup. So you all need to do the same thing. You need to be patient with your setups. Know what works for you. And if it doesn't, if that trade doesn't match your criteria, don't force it. Do not force it, because mentally you're going to trick your mind into thinking that you're going to give yourself all the evidence you need to get into a bad trade, to get in too late, to get in too early. So you want to be super patient. And that's, so everything that I'm trading, or I'm saying how I'm trading, is how the automatic entries is going to work. It's working that same way. It's looking at it the same way I enter. It's looking at rejection of a zone, looking at a lightning bolt, looking at my SMAs and a few other these other confluences that I talk about when making entry. And then it's going to exit, it partials out the same way. As I'm approaching these simple moving averages, you guys now have those take partial lines where it's going to automatically partial at those targets. Simple, easy, don't overcomplicate it. If it doesn't make sense to you, don't trade it. Right? So if you have to stare at it and wonder, is this a good trade? Is this a good entry? Don't trade it. Learn your self-control with the charts, because it will eat you alive. We can't control the market. Only thing we want to do is, swim with the sharks, right? We want to swim with them like the guppy next to the shark. We don't want to go against the shark. We want to just say, hey, shark's going that way. Look, it's very clear the shark's going that way now, and we're going to just go in with it. We're just going to ride alongside it. And then, you don't have to grab the full move. I hear lots of times people say, damn, if only I held it. Hindsight is 20/20 vision, right? Just get what you can. If you can get a runner, if you can take a partial and keep that runner in, great. For me, runners are quite interesting concept, right? Because say I'm running this trade and I take a partial 50%. At this distance, 50%, right? So that's 286 pips, say 300 pips. Now my partial's at 50%. To get that same amount of money, I've got to run twice the distance. Take partials, having a runner is fantastic. You should have your runners, and so forth. But for me, I'd much rather just parse it out along the way. And if I can get a runner in, it's really a small runner, and it's just giving me extra money to buy in my next position. That's the way I look at the runners, because for me to get into a trade and then I'm parsing it out 50%. Well, now to make that same amount of money that I took now at the 50%, I've got to run twice the distance. So if you were to look at it, if you don't feel like it's going to run twice the distance, why not just take all of that money off the table now? You ran half the distance, making more than what you should expect making if you have that partial running twice the distance at that point. So these are just concepts that you need to consider. when trading. But that's why for me, I don't care if I, this is great. It's a nice little, it's great if you could get in here and ride this all the way down. It looks great. It feels good. It doesn't have to be glamorous for me. If I can run it from here to here, and if I'm seeing, oh shoot, look at the zones, this may be major rejection at this level, I'm just going to close out my whole shit. I'm just going to close out the whole position and just take it. If it breaks, then I'll re-enter if I have to. If I can find the proper confluence, I'll re-enter. Does that make sense, everyone?
Yes, sir. Very clear, very clear.
Yeah, so that's the way I'm trading it. That's what I'm preaching here. That's what the lightning bolt strategy is about. But it's definitely very flexible for you to apply to whatever style of trading you want. If you want to trade on the 1 minute, when I first entered the game with this full blown out version, I came in on the 1 minute, and I was blowing that chart out the water, just 1 minute entries, doing the same concept and killing it. But you can apply this to 30-minute charts, to 1 hour, charts if you want to, swing it or day trade it for the full day. It's super, super flexible for you to use on slower or longer time frames. So you don't have to be, bound to the 1 minute or think you've got to trade a 1 minute chart or even a 5 minute chart. You can stick to your 15, and keep in mind, to identify trends, the higher the time frame, the better, right? So my 1 minute chart, I'm not usually looking at trends. I'm just looking at price action and zones, and I'm seeing a rejection of a zone that's pretty significant. It's because it's rejected a few more times, a few times in the past, and I'm immediately getting into an entry, and I'm immediately taking a partial once it approaches my area, where an area of resistance, which is going to be what we discussed, the zones and the simple moving averages. Because in a 1 minute chart, you're not going to find the overall trend, right? You're just not going to find that overall trend. So looking at just the 1 minute chart, you're not going to catch the trend, if you will, and trade a trend, because 1 minute it could be, bullish. The next minute it's going to switch on you. So me, I'm just concentrated on what's happening now on the 1 minute. As I pace it out and I'm looking at the 5 and the 15s, then I'm looking at an overall trend. And that's why the LB fibs or the RSIs, be very careful when you're playing it on a 1 minute chart or 5 minute chart. LBs are good on the 5 minute, but once you start getting to the 15-30, those LBs, those LB fibs and those RSIs become even more stronger. So keep that in mind when you're when you're trading and making your entries. Understand where you're at in the market and understand what what period you're dealing with. The higher the time frame, the better for identifying trends, but understand your stop losses are going to be at a greater distance. So if you want to risk your 1% per trade, then you need to drop your lot sizes down, if you will. You really want to just make sure you understand that risk management, right? So for me, I'm okay with a higher lot size, and my high lot sizes are $10 a pip. They're just one standard lot, and that's all I do, 1 to 2 standard lots. On the EA, the automatic trader, it's growing the lot sizes as the balance of the account is increasing. It's then getting to 2.5 lots, then 3.0 lots, and so forth as the lot is as the account is increasing. But when I'm manually trading, I'm just sticking to 1 to 2 standards. That's it. And I'm okay with dropping down to a 0.80 or 0.50 as well. So you don't have to go hard, with it. Gather up those $50 wins, gather up those $10 wins. At the end of the day, depending on your account size, it's significant. And if you can get into those swings, there are many individuals in the group that really get into some like early entries, and they hold it, and they are just freaking amazing. We got, a lot of you all are doing it, but Fred also, he gets into these trades and we're getting in market open. He's like, oh, I'm always holding that since last night. and he kills it. So, get accustomed to what works well for you. Using this strategy, this indicator should be able to help you gather up the proper confluences so you know where you're at in the market.
Hey, Squawk.
Yes, sir.
One of the things that I wanted to, share, you just did an amazing job of explaining this. How I have my setup, for the LB, I have all the way from 1 minute to the H4, so I can see everything.
Yeah.
And I'm working my way back from the H4 to H1 to 30 until I get to the 5 or the 1. And like you just said, if you could get the H1, the 30, and the 15 to coincide with the 5, that's a higher probability setup to
Yeah.
take all day long right there.
Absolutely, absolutely. If you're looking at the multiple charts, you're understanding where you are in the market. That's important, right? Because you can have say the H4 and the 30-minute bullish, and if you just go to your 1 minute and you bounce in and you jump in without really analyzing, on the 5 minute without analyzing, you could be in the downward trend for that moment before it turns around and continues bullish. Right, so you don't want to just jump in because you're going to get knocked out of that trade on a M5, right? So it's good that's good practice to have those charts up and understand when you're at in the market. I usually have my 4, like I said, 1, 5, 15, 30, and then I have one free floating chart that doesn't have the indicator running, but I'm running either H4, usually always, and then I'll just bounce between H1s and such. When people are talking and they're like, hey, you know what, look at this look at what's happening on the H4, H1, I'm bouncing on the chart, looking at that information, looking at what's being reported. But I'm running all 5 charts, 4 with the indicator and 1 without.
Hey, Squawk, so this trade right here that we had a buy signal and a lightning bolt. So would you have taken it or?
Yeah, exactly. So if you see here, if I could zoom in, if you could see here, there was a buy, right? And it took the partial right here. It was a buy that took the partial right here as it was approaching this I think this is the 20 minute, I'm sorry, the 20 SMA. So I would have taken this, this buy was taken in our example today. I just happened to take it when we saw it while demonstrating, and then I had it partialed out right at this level. I would have taken this all day. This would have been more than enough for me. I don't need it to, go from here and then, super high, to the moon trade. That's enough to, I look at things just practically, you know what I mean? I look at things like, hey.
So would you still stay in it, or would you, stop out? Because I guess it wicked down, and now they're buying it back up.
That's right. So this would have been a partial taken, not a close. This would have been a partial taken. And if it knocked me out, that would have been okay. It wouldn't have knocked me out just yet. I would have been down. I would have been still in it because the stop loss would have been below this swing low right here. I would have still been in it. But if it knocked me out, I would still look for entries. And especially as this simple moving average, right, becomes, over time, this simple moving average should come a little bit closer, right? And then you're going to get more bar prints and so forth. And, you're going to get more bars and such. But then, especially as the simple moving average starts to cup underneath price, I'm looking for those entries. So if we're in this area of consolidation and the simple moving average starts to swoop underneath price or near it, that's even better for me because I know that I need to see my entry above one of my simple moving averages as well. As for, it's just additional confluence.
Right on. Thanks.
No worries. So once again, I don't attack it. I don't just get into one trade and it knocks me out and I go, oh, that's it. That's the end of my trade. No, I'm going to look and see, does it make sense to enter again? Does it make sense to enter again? Look at this chart here on this side here. So this was a buy. We took a partial, we closed out intentionally, but it would have been a partial taken. Price came back, say it knocked me out, and I'm looking and I'm saying, this thing is starting to be respecting this zone. Price is respecting this zone. This LB is still in play for me because I didn't get a opposite LB just yet, and the LB didn't swing or retrace really deep at all. It's still below the 23.6, so this LB is still very valid for me. And then as price begins to, if we get volume and price breaks and closes above this 20, I would most likely take that entry.
Okay, got it.
At that point.
Got it. Squawk, for your stop losses, what do you need to see to move your stop up?
I only move my stop when I take a partial. After I take a partial, I leave my stop where it's at.
Okay.
And I don't move it anymore because I'm taking partials along the way. I'm eating regardless. Some people will move it up, not take a partial, but move it up, move it up, move it up and protect. But protect that full position, or maybe after their first partial, they continue to move their stop loss up. But because I'm taking partials along the way, that lot size becomes small very quickly, that I'm okay with keeping my stop loss where it's at, which is break even.
Got it. Got it.
Oh yeah, there's something else I wanted to show you guys. Sorry about that. I'm glad you mentioned that. Where is it? Where is it? Okay, yeah. Exit price offset in pips. Once again, what happens here is I can rename this to make it so it makes a little bit more sense. It's a little bit more user friendly, or reads like a human. But this here is a value that if you click on protect, it's going to move the stop loss to your open price plus the number of pips that is entered here. So that when you take a partial, I'm sorry, when your stop loss is hit, you're not in the negative by fees. You can actually close at $0, or a few pennies above your a few pennies above break even. So this is like an offset value, because without this, or if this was set to 0 and the stop loss was set to your open price, which is break even, every time you break even, you're going to be down a few bucks or a few pennies because of fees that are involved, right? So you can offset this and that kind of nudge price to be a little bit above your open price. So when stops hit, you're in the money. Does that make sense?
Beautiful feature. Beautiful feature.
Yeah, so test that out too. I've tested it out. It seems to work well, but everyone should obviously test these features out as well. And there you have it. I think that is it's good to be on these Zooms and see everyone, and to hear everyone. Like I said, you see, like, look, yeah, price is breaking above. If price decided to close above this, I may take that entry. It would have been better for me to have taken it really like right down here, like right here, at that swing low, so that my stop loss is the tightest, right?
Wow.
But if it closes above and I see that it's trying to play, it's rejecting it and kind of continuing, then I'll find entry at that point and have my stop loss either down here, taking partials midway, or my stop loss right here, depending on how the market's moving, depending on how I see it moving. It's great to just take a snapshot of a diagram, but what you're missing in a picture is volume. You're missing the intra-candle activity. So that's what I look at to get a feel for the market. I look at that stuff to see, hey, you know what, are we swinging high and swinging low within the prices, or is this just gradually just moving up? Is it gradually pushing in a direction? These are things that I read before I make entry. So yeah, so we're going to continue with these Zooms, and then hopefully we're going to continue to the last Zooms. I was having the automated trader broadcasted on the Zoom, and we were watching the automated trader. So we're going to get back to that as well. And I will continue to gather all of your information, all of what you find with the auto TPs and auto SLs, stop losses, and we'll then, determine what needs to be added, what needs to be fixed, and then we're going to move forward with the entries, the auto entries. But these exits have got to be tight, right? We got to make sure the exits are tight. That's definitely half of the problem. I know a lot of people are having difficulty entering, but you're also having difficulty exiting also. So we want to make sure these exits are fire. And that's it. That's what I have for you all. If you have any questions, I'm in the Zoom. It's only 10 o'clock. I'm in the Zoom. I'm sorry, not the Zoom. I'm in the Telegram group. Drop your messages. If you DM me, please just don't DM me. DM me, but tag me in the group, because with Telegram, it's so spammy that I get like 100 different groups that are spamming me, adding me to their group, and then everyone else's messages are being pushed down. But if you say, yo, Squawk, in the community, Squawk, take a look at your DM, I'm going to look. And here we have this just played out, a RSI divergence, a bullish RSI divergence signal that played out on the 5-minute, and also it paints it out on the 15-minute. So it'll be quite interesting to see how this plays out going forward.
Hey, the first buy, at least to get a better entry, is there a telltale sign? I guess that was a zone.
This here
That's why, yeah, that's why the buy got I
triggered.
guess,
Mm, mm,
yeah.
yeah, so the buy is different, right? So I don't trade off of the buy. I just trade off the lightning bolt, and I'll explain to you why. The lightning bolt is triggered when there is a certain condition that indicates it's a swing high and it's actually showing signs of reversing, like truly reversing. It's not just a swing high, right? So, and I'll talk about this again about repainting and such. I don't repaint. A lot of other indicators will. What they'll do is they're going to get a. I'll touch on this quickly, but for new individuals, it's very interesting. It's an interesting concept or discussion. I get often, hey, does your indicator repaint? Well, this is a bigger question, right? So if you get a swing low, right, and other indicators may give you a swing low, and then price will move forward this way, and then it goes back down. And what they'll do is they'll move that marker from here, they'll move it down here. And then it looks so smooth. This was never, this swing low marker never existed in that world, right? You're just getting this swing low here, the swing low marker, and then hopefully it continues. If price continues to move back down again, they cross this out, they remove this, and then they move their marker at the new swing low. The way this indicator works is it doesn't do that. The way this indicator works is you're gonna see buy, LBs. Let me clear this. You're gonna see a buy, right? So look, this LB played out. I mean, this LB was triggered, but it didn't quite play out. This is another LB. If this LB was lower, and it actually is, instead of moving this LB from here to there as a market, I keep it there so that you can see how many times the LB is failing. For me, that's good information. For me, that's letting me know when I get this LB, I can see, man, the LBs didn't play out 3 times. I got a 4th LB. Maybe I should just wait this out because the downward trend is just too strong. You don't get that information when the dot, or when the indicator or whatever it is just repainting and moving it down to the new low. You're removing a lot of information that will help you measure what's going on in the market. So I don't repaint it in that way. If I were to click this chart to a different time frame and then go back, yes, I'm not saving. It's not a solid state where I'm saving every LB. So when I come back to this time frame, it's going to look and see, well, what's the nearest LB? What's the proper LB? What's the proper swing low? And it's going to then draw it out that way. It won't redraw these, right? Because it was removed. You're recreating LBs on a fresh chart when you change time frames. Eventually, I'll consider maybe changing everything that happened to the chart and then draw it back up. I will be doing that for our targets, but for the LBs, I don't know if that's necessary because we shouldn't be running this indicator and just changing timeframes back and forth and so forth. You're not allowing yourself to see the full picture when you have multiple timeframes running the chart, running in multiple charts running the indicator. So now to answer your question, because I didn't answer your question about the buy, what happens with the buy is the LB is a swing low or swing high that shows a sign of reversing. The buy is when the buy is printed when the when price crosses over a simple moving average. I think in code, I have it as the 8 or the 12. I've got to look. It's the 8 or the 12. But keep in mind, based on my whole concept and what I was discussing today, is that simple moving averages are areas where you should see price react. So if you get a buy, it doesn't mean for you to, trigger happy, click that buy now. I got to get it now. It's not yelling at you like Jim Cramer, buy. It's just telling you, hey, price is now moving over a simple moving average. And now that simple moving average is behind us. And it's looking like it could be a buy signal. But keep in mind, because we're crossing over a simple moving average, we're crossing over an area where we should expect reaction. Most cases, you're going to see price retrace back again because it's reacting to that simple moving average. And then that should then give you an opportunity for a better entry. I hope that answered your question there with the buys.
Okay, so yeah, definitely, at least to my understanding, and I guess correct me if I'm wrong here, and just to make sure thought A equals thought B. So we go off lightning bolts, and better not to follow the buy signals, and then if we do get a buy, probably better to get into on the retest.
Correct.
Okay.
Absolutely, exactly. That's basically it. I was actually considering changing buy and sell to something else, but
Yeah, I remember we talked about it a couple
yeah,
months
yeah,
ago.
exactly. So, it just gives you an opportunity to be aware. Of course, if there's a lot of volume, you get the buy, you're going to miss the retest, right? That's a part of trading. We need to identify, well, how are we going to get in? Are we waiting for candle close or not? That's just what you learn with the instrument you're trading, just based on getting chart time in. It's always safe to trade the candle close, but you're not trading that candle close all the way up here. You want to trade it where it makes sense. But sometimes you're going to get a buy, and if you're thinking, hey, I'm going to wait for that retest, sometimes you may not. But in a market like this, you should see a pull back of some sort, some very small reaction on that a minor simple moving average. And that's it. There we go. So to our earlier example, when we're talking about the trade, and I said, hey, you know what, as time passes, this simple moving average is going to start to swoop below price. And as it's swooping below price, and we're now above that simple moving average, if this closes, I would probably consider entering. But I would be looking at I would be looking at this, the chart. I would look and see, well, I'm heading into this zone. How relevant is this zone? And then I'm going to look back in history and determine how relevant is this zone. Is this a major or minor zone? Can I handle any retracement, or should I expect a major pullback off of this zone? And then I would make a decision to enter. I'd probably enter anyway, because I'd be I have two different zone setups. This particular chart this one is on the right, is 800 5-minute zones, and this one is 3-minute zones on 30-minute zones, 300 bars back. So I'm getting different sets of zones. I like the way these zones look and feel. It's the same time period, 5-minute, 5-minute. So yeah, I would enter.
Hey, Squawk.
Yes, sir.
Also, if you look at this, this is I keep going to it. If you look at what just happened on the 4-hour, this just bounced off that 50. And that's that reaction that we're seeing now to come off. So higher time frames, I'm telling you, it's amazing.
Oh, 100%. So this is the 20. This is the 4-hour. That's the 200. I don't have my 50 up, do I? Here's the 50. Are you running simple? Or are you moving?
Exponential.
Yeah.
Let me see if
exactly. So that EMA is, it's solid. And it's rejecting this zone, right? Although I have a zone here, this is a lower time frame zone based on my configuration. But if I were to zone this out either manually or using the tool, there would definitely be a zone at this level, right? You definitely have a zone. You could probably draw it out right here like this.
Right. Exactly.
Right. So yeah, that's but also the 4-hour is bearish.
Yes.
For a quick scalp, it may be good. You may get a little retracement, but just keep that in mind that it's super bearish. And then we got to weigh out, is this zone relevant enough to think that we're going to flip into a full retracement?
Exactly. That's still bearish.
Yeah. Exactly. So there you have it. I mean, these are great discussions. We should do this, many more times. I may even share my Zoom link so that everyone can, during the morning open, if I'm in it, we'll share it. If not, someone else here can hop on and allow for everyone to hop on as well, so we can hop on and I can hop in or out as well, depending on what I'm doing, if I'm coding. But if I'm not, I'll stay on that zone.
Yeah, that'd be absolutely awesome, especially with I guess the seasoned traders that get a $13,000 in like a few minutes. That would be awesome.
Yeah. So I'll find out if there's anyone that wants that Zoom link, then I'll see what I could do. I may even just open up another one I'll see if I could create, I don't know what my package offers, if I could have like sub accounts and then I could just give people, assign people an ID or something like that, or just create one additional ID. But I'll look into it, and then maybe that's a good idea that we could all at least just be on a Zoom, even if we're just, talking through the morning, or trading or not, or, kind of just talking about the setups that we see.
Cool. Yeah, I'd be down. If you want somebody to lead, I'm usually on voice in the morning, so
Excellent.
I'd be down.
Definitely, yeah, I'll definitely keep that in mind 100%. And it looks like this may play out. This looks like this trade may play out. So we'll see. We'll
Yeah, I got SPX call, so it's working.
Nice. Very good. Very good.
Yeah.
So if there's any other questions, please ask. If not, I'm going to drop off. I do see some things. I want to catch some of these things before you all catch them. But I'm curious to see if you all catch some of the things that I think I saw during this demo. And of course, fix it. I want to get my automated trader back up and running with this version. I want to get back to, I've been putting off my trading for, a few weeks actually, with just some trades here and there. But I've been really about critiquing this because this is going to help me in the long run anyway. So I'm okay with that, that time spent. Yeah, there you have it. And I think we'll end right now. I think we're good.
All right.
Thank you so much for your time, Squawk. Really
Thanks,
appreciate
everybody. Thanks for joining. Glad to see everyone here, and we will do it again.
Thanks for your help.
Thanks a lot. Thanks, everyone. Talk soon.
it. Bye.